IRA stands for Individual Retirement Account, and it's basically a savings account with big tax breaks and can be used to invest in real estate. Stephanie Parker with Delta Trust and Bank joins us with details this morning. Good morning. We're so glad you're with us today, Stephanie.
I'm so glad to be here. Thank you.
Yeah, thanks for coming in. You know, it's the time of the year when most people start working on their taxes, time to start handling all of that, and they're looking for deductions. Is this a possible option considering?
Yes, it is. If you have not already made your deduction or major contribution for 2012, you have until April 15th to do that. For 2012, the limits that you can contribute if you are under 50 is $5,000. If you're over 50, there is a catch-up provision that allows you to contribute an additional $1,000. Those limits will go up in 2013 by $500.
Okay, numbers to keep in mind there. Now, is that contribution amount fully deductible?
There are multiple factors that will determine if it's deductible or not. It is best to discuss with your CPA or your tax advisor prior to making the contribution. However, if you do not fall in the category where it is deductible for you, you may still choose to contribute to an IRA for savings for your retirement or longer, because an IRA will give you more flexible investment options. Some of those being real estate, privately held assets. You can still invest in the open market as well.
Yeah, that was actually what I was going to ask you next. You know, we mentioned real estate. Name some of the other things that you said as well.
Farmland, timberland, partnerships, privately held assets, corporate real estate, rental properties, anything that is not considered a collectible.
Okay, how can you use real estate as a big investment?
A lot of folks choose to invest in timberland and farmland, and they do that so that the rental proceeds or the crop income, the timber income, goes into that IRA to help build that IRA. Most people actually choose to do farmland and timberland. We're starting to see a really good growth into the rental property sector.
Okay, included in that as well. Now, what else did you keep in mind when exploring this type of investment in IRA, of course?
When using an investment like this in an IRA, it cannot be used for personal use. Family members cannot rent. It has to be to an outside party. Your rental properties, you really need to have a property manager collecting the rents, and you stay as far away from it as possible, within arm's reach, as the IRS would say.
Okay, a really basic question here though, but to maybe help our viewers get a better understanding. Now, an IRA is not something that you can actually get through work. Talk about the difference that you see between that 401k and of course the IRA.
An IRA is funded with your money or rollover money from a 401k. What you get at work is a 401k or a pension plan that oftentimes employers will match whatever you put in, but what you put in will come out of your paycheck. An IRA has smaller limits, but yet it is more flexible. You can control more of what's in it. By having a self-directed IRA where you can have real estate in it, you control your assets more than if they were in the market. Let's say if you have rental property and it is always rented, then you know what stream of income is coming into that account, instead of worrying about, you know, where did the Dow finish today, where is S&P at today. Really the main factor you have to worry about with real estate is what is the real estate market doing. Okay. But it gives you a little bit more control. Okay,
a little more control there. If you have questions about this, you can contact Stephanie. Her information there up on the screen right now. The number 501-907-2280. Again, this is Stephanie Parker with Delta Trust and Bank. Stephanie, thanks for coming in today.
Thank you for having me.
We appreciate having you with us.